a look at what's happening in the business world now. Xolani Mbanjwa joins us now. Xolani, good afternoon to you. It's been a long time since we last saw each other.
Yes.
Not a lot of business going on. It's load shedding.
Yeah, it's load shedding and the elections. So I was really looking forward to being back. It's been an interesting couple of days with the coalitions, so many. And it's something interesting to look forward to in terms of these negotiations.
Well, load shedding is going to have a big impact on sentiment. MTN shares, they're surging. This is because of what's happened in Nigeria.
Yes, and we know the history between MTN and other companies and Nigerian authorities. This is quite good. There is M-Pesa for, Vodacom. Many telecoms companies have got a payment system. When it comes to the mobile payments, it's easy money. It's easy to transact money. The news actually has added, to Africa's largest mobile operator, MTN, with their share price today actually surging. Their Momo platform is really expected to now grow and actually set it apart from the rest, especially in that area, in that region when it comes to Nigeria, its biggest market. The customers there at Momo increased to 51.1 million rand in the 3 months to end September across all markets that MTN operates in, and it's something that is weighted with bated breath that in terms of the 50 million plus customers in Nigeria is going to actually put them way ahead, streets ahead of everybody else. Carl Heves at Benguela Global Fund Managers was absolutely also elated by this particular news.
Basically the approval in principle for a money banking license. So it enables MTN Nigeria to offer a full suite of financial or fintech products. Currently, their license was limited to money transfers, so the new one will allow them to issue loans and insurance products, as an example. So that should go some way to enabling MTN Nigeria to grow to that target of 100 million active Momo users, which is their fintech product, by 2025, and also a big positive towards their aim of being 20% fintech revenue by 2025. So overall, a very positive indication for MTN.
And then Pepcor's expecting its profits to soar as well. It seems to be doing pretty well.
It seems to be doing very well, and it's one of those companies that were impacted by the July unrest, and they are saying that they're expecting some good performance in their annual financial results. There's still that issue of Pepco, former Pepco shareholders and owners actually not feeling quite at home at Steinhoff, but this is absolutely good news for them when it comes to what their performance. And it's Ackermans under them there. It's a number of other retailers. They have done quite well, and the market is really excited about what the prospects of a huge. I mean, I think it's 90%. If I'm not mistaken, 90% growth in their profits that we expect to announce in the next coming days when they do announce their financial performance. And Matete Tulare had this to say earlier on about what the market expects when it comes to Pepco.
In Pepco, obviously, they're in the process of finalizing their financial results for this year, and obviously they've now said they're able to provide a further trading update relative to the one that they provided a few weeks ago, and they have advised that there is reasonable degree of certainty that the earnings per share will increase by at least 20% relative to last year. And I mean, some of the key factors that they have said could be attributed to all of this is some of the improved trading performance relative to last year, where last year, if you remember, we were impacted by the COVID-19 trading restrictions. That apparently has helped them. They've also reduced quite a lot of their financing costs, which means that the group's net debt position is also lower. But also they have said that they've also entered into favorable lease renewable agreements, and also they have consolidated their retail footprint in specific retail brands. And I think next week on the 19th, when they release their results, it will be quite interesting to see how well they actually actually have fared, given the fact that they've said that their earnings per share is now up by at least 20%.
Xolani, the Purple Group, is this slightly what's the next party?
No, no, absolutely
is
no. It's
else?
not Purple Cow, Purple...
Not Purple Cow. Who were they? No one cares. The Purple Group, they expect their profits to soar.
Yes, and this is, we've been waiting for these numbers. The market has been waiting for these numbers because of Easy Equities. Easy Equities is an online trading platform. It allows you to buy a fraction of shares in the New York Stock Exchange in companies listed there and the Johannesburg Stock Exchange. As people were sitting at home last year, they blew up in terms of people registering, people learning how to trade. A Purple Group, which actually owns this particular trading platform, Easy Equities. I'm sure you have a friend or somebody knows somebody.
No friends. Who,
somebody out there knows somebody who has entered this trading platform. When it comes to the group itself, Purple Group, they do have other businesses such as GT247. They haven't done well. They're actually expecting a loss of 5.3 million rands, but not Easy Equities. They're expecting their profits to be up just above 700% when they do, announce their results, because people have been trying to make money. The markets did a yo-yo last year. They went terribly down, the JSE touching 38,000 points, and then things started, looking up. That's when people made a lot of money, and Easy Equities has taught a lot of people how to trade, what to look out for, and trade without actually, brokerage fees or a broker in between. It's really, really been a learning curve for many people who are interested in making money in the stock market. And Hal Gieves had this to say when it comes to this particular platform just blowing up in the past year.
The main driver of that performance has been Easy Equities, which is their online securities purchasing, or essentially online platform that has really matured and reached scale. So that's been a big driver of profitability. There's also a fair value adjustment related to Easy Equity, but the crypto product there. So that contributed 50 million to the profitability. So yeah, overall a very solid performance.
Well, we've got to talk a little bit more about load shedding in Eskom at the moment. I mean, we were told there would be no load shedding this week. Now it's happened, twice, but also stage 4. The thing about stage 4 is that you really can't get anything done.
Yes, you can't get anything done. You've got way more hours, at least minimum 4 hours per day that you are going to be load shed. And for businesses, especially that work, that trade overnight, is really, really bad news for them. It's costing the economy. The CSIR has done the calculations. We've talked about it before. It's billions of rands per stage, and this is stage 4. It means more money being lost. But interestingly, what we are not thinking about is what is this going to mean to the likes of Moody's and Standard & Poor's and others. And this is important because we have the midterm budget next week, and it's going to just add to the problems and the challenges when it comes to their review of South Africa. This is not going to look good on South Africa when it comes to investors out there. That's why the news yesterday that government is really, really, working hard to find solutions, because it could not have come at a much worse time with such high, petrol prices for business. So you have to contend with, high petrol prices, and this is really, really not good, especially for those businesses that have really really thin the bottom line. So really it could not have come at a worse time for the country. And ratings agencies, we're expecting them to not to say anything glowing about South Africa when they do, in the next 2 weeks, review South Africa.
I mean, sentiment's very interesting because ratings agencies and everyone's also going to be looking at the results of the local election. Now, I felt, and this is my own personal view, that while a lot of people didn't want to have an election now, I thought that it might make the country, this is hard to explain, but it might make the country feel better. because you had a chance to speak and be heard. Your vote would be counted, and it was. So what I'm saying is, now that that's happened, but then the worst thing that dampens the mood immediately, and we know this, is load shedding. Add to that the idea that maybe the ANC falls below 50% in 2024, and that's by no means definite, by the way. I know a lot of people think it is. I don't think it is at all. It could be harder to fix Eskom's problems without one party in charge. I mean, maybe. There are lots of ways to look at it.
Yes, you're absolutely right. And right now, we just need to solve this Eskom problem. A lot of structural reforms, including the opening up for businesses to actually go 100 megawatts into the private sector, and also the latest round that was approved for independent power producers. It bodes well for the country, but everything else, all that good work is undone by these stages and the uncertainty of it all. At 11 it was stage 2. 3 hours later, it's stage 4. And it comes a week after there was a promise, Stephen, that we will probably not institute load shedding the whole of next week. That was just 7 days ago when Eskom promised we might not see load shedding, this week. Look at where we are today. It does not bode well for perception, investor perception in particular.
It also, I mean, we're going to see a lot of things happening now. We've seen, the renewable energy. We've seen COP26. We've got this 105 billion rand, I think it is. I mean, this has been well managed. I mean, 6 weeks ago, Andrew de Ruyter started talking about it. There was a lecture, there was this, there was that, there was strong hints. Then at COP26, oh, look, as if by magic it's all been agreed, right? It's actually been quite clever politics. But also, this is over the next 3 to 5 years. Now, just to be clear, this is not 105 billion rand we just get. It's investment, it's sort of soft loans, it's concession financing, it's all of these things that you understand and I don't. But what it does mean is that that's quite a large amount of money coming into our economy in quite a short period of time. Everybody is excited. It's a good move. Let's move away from fossil fuels. It's coming at such a bad time that the price of Brent crude oil has gone up, $82 per barrel, and that sort of energy, that sort of fuel is so expensive, and we're a net importer, and coal, which we have an abundance of in South Africa. Investors are moving away from it. It's to encourage South Africa to invest in other forms of energy. So it's come at a very tricky time for South Africa, and personally I may not be that excited about it because I don't think it will be so easy to win South Africa's energy resource so quickly away from coal. Xolani Mbanjwa, so much more to talk about when it comes to energy and electricity. Thanks very much indeed.